Kate, do you have a speaker for me?
Yeah, we've got Stephen Primo.
Stephen, can you hear me?
Yes, I can. Hi, John. Hi, Kate. Hello, everyone.
Morning, how are you?
Great, doing well.
Where are you broadcasting from today?
I'm on the West Coast. I'm in Los Angeles, and ready to go. Up and early.
You guys going to get those 100 degree temperatures today?
Most likely tomorrow. I think there's probably be in the 80s, close to 90s tomorrow.
Yeah, I'm broadcasting from Incline Village, Nevada, and they warned us not to go outside
Wow.
in Reno anyway.
Right.
Okay, you go ahead and get your PowerPoint up, and I'll give you a quickie introduction here.
Okay. There you go.
And of course, all of my papers are in the wrong order. I have the last person of the day all ready to go. Let's see what we've got here. Okay. Stephen Primo has actively been involved in trading in the markets for over 40 years. His trading tenure began in 1977 when he was hired to work as a floor reporter or runner on the floor of the Pacific Coast Stock Exchange. Primo reached the pinnacle of his floor trading career when he became a stock exchange specialist for Donaldson, Luskin, and Genred, or DLJ as it was known. As a specialist, he was responsible for making markets in over 50 stocks, a position Primo held for 9 years. During that time, he traded through the crash of 1987 and the bull market that followed. Primo left the stock exchange floor in 1994, focused on managing money and to teach his own unique approach to trading the markets. Scores of students from beginners to advanced levels in over 115 countries around the world and in virtually every state in the US have gone on to become successful traders after being introduced to Primo's proprietary methods of trading. Stephen, I remember the old specialist system. I used to be on the floor myself. That
Right.
was basically a license to print money, wasn't it?
No, not actually, and I'm going to talk a little bit about that today as well. It really wasn't. I mean, that's kind of a common urban myth, but I have tons of stories of people that were blown out completely, and even though they were specialists themselves.
Really? Okay. Well, go ahead and inform us. You have until 5 minutes before the hour when we launch our first batch of prizes for today. I'm going to go ahead and mute myself, and you have the floor.
Okay, thank you, John, and thanks to everyone at the Investor Summit, and thank to all of you for coming here today and listening to speak to a lot of good speakers and educators. Excuse me. Today, I really want to improve your trading. So I'm going to be talking about two things that you can do to immediately improve your trading. These are things that you can apply to your current strategy, or actually you can devise a strategy based off these things. They're so simple, but really powerful. And you'll see how they can improve your trading right away. For example, let's take a look at this chart here. Here's a chart just from a month ago, really, in GME, GameStop. I'm sure we all heard about that and saw on the news how that stock took off more than once. But let's look at the beginning of May. Now, prior to the stock really taking off, most traders would look at this and say, well, really nothing happening here. An inexpensive stock, but it's in a directionless market, kind of going sideways, drifting up a little bit, but most likely nothing's going to happen in this stock. Well, with the first edge that I'm going to be teaching you today, you would have known that the overall trend was actually up, even though it appeared as if it was going nowhere. And with the second edge that I'll be teaching you today, you would have known that the short-term trend is up. Now, when these two are combined, the overall and the short-term together, you have a synergy for a high probability move, in this case, to the upside. And then we saw with news later on that the stock immediately went up 47 points. Now, this is where traders usually fail because they say, well, gosh, I wish I would have known, somebody made an announcement or some news came out and I missed this entirely. Well, with what I'm going to be sharing with you today, you would have known in advance to actually where to buy this and where to actually enter into the stock. So this is what we're going to be talking about today. Two things that you can do to immediately improve your trading. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. As John said, I've been trading now for 47 years, actually, going on 5 decades. I started my career on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years. and 9 of those years I was a specialist. If you're not familiar with what a specialist is or was, because there are not really a lot of them around anymore, just Google those pictures of the trading floor back in the 30s and 40s. And if you ever see those people making those weird hand signals behind those large wooden podiums, these were specialists. These were stock exchange specialists. What they did was they made markets. They had to buy and sell in order to create a market in roughly 50 or 60 stocks. That's what I did. I made markets in IBM, Waste Management, US Air. I made markets during the crash of 87 and the bull market that followed. So I've traded just about every market environment you can think of: straight up markets, straight down markets, sideways markets. And in my 47 years of trading, I know what works in terms of consistency and I know what doesn't work. So about 15 years ago, I teamed up with Pro Trader Strategies, my sister site, and we formulated specialist trading with one goal in mind. And that was simply to educate traders around the world. And I'm happy to say that we have students in over 115 countries around the world and in every state in the United States. And our one goal is simply to put the power back in your hands so that you can make your own trading decisions. If there's one thing I've learned in my over 4 decades of trading, it's that traders that fail is because you're taking yourself out of the game. You're allowing someone or something else to make your trading decisions for you. Now, that's okay because that's the way we're all trained, right? We're all taught to follow some guru or someone who knows what they're doing. And we should, because they have a lot of great information. But once we get that information, then we have to make our own trading decisions. So the good news is that's the goal of specialist trading, and that's the service we provide. We provide you with all these high probability techniques, methods, and strategies to help you along your way to take charge of your own trading. You'll see that in today's educational presentation. Now, before I begin, I'm required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 2 edges that I'm going to be teaching you today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And remember, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, a lot of our students and prospective students say, well, Steve, how can I get more education? Well, on a daily basis, if you follow us on Twitter, you'll see that I post upwards of 5 to 7 different snapshots a day of signals that our methods and techniques have generated to little bits of financial wisdom. So there's lots of great free education on a daily basis. You might want to copy down our handle right there. So please feel free to follow us on Twitter or X, however you'd like to call it or name it, okay? Now, remember, as I stated, we are an educational company. So if you come here today thinking I'm going to tell you what I think the market's going to be doing, what I think the best stock is to buy, the best time frame to trade, or what I think you shouldn't be buying or you should be selling, you've come to the wrong place. That's not what we do at specialist trading. Remember, a good mentor doesn't tell you how to trade. He teaches you how to trade. So that's my goal, to simply teach you how to trade with the same things that were taught to me some 4 decades ago and that have sustained me now going on 4 decades. And you'll see that today in my educational presentation. Okay. Now, I'd like to take questions at the end. So if you do have questions, please wait till the very end. I promise I'll save a few minutes so that you can ask me questions. Or if we go to the ending point, I'll give you an email address where you can ask us questions as well. Okay. All right. I'd like to start off by what my mentors taught me, because as John was saying, it's a common mistake. People think that specialists or floor traders on the floor were just had a license to steal. And that really is not true. I know my first year or two, almost 2 years as a floor trader, I almost thought I was going to be let go and get fired because I couldn't really make any money. At the time in the 70s, we were the only ones that were actually able to trade. There were no such thing as home computers yet, or systems to trade online. There was no such thing as the internet. So the only people that could actually trade were people on the floor or in trading rooms, in bank trading rooms. So even with all this access to the information and be able to trade online and quickly, or not online, but through the computer system, I still struggled tremendously. And the funny thing was, I was taught probably the same things that many of you are being taught today, that you have to follow a guru, you have to wait for the earnings to come out, you have to look at all the economic reports, you have to know exactly what the inner workings of each company were. And I was in charge of making markets in about 50 or 60 stocks. And even with all this information, I couldn't make a dime my first year or two. So I know if you're struggling right now, if you're having difficulty trading, I know exactly what that's like. I didn't think I was going to be on the floor much longer. I was lucky because I had a couple of mentors. These were specialists themselves who had been trading roughly about 30 or 40 years on the trading floor that saw how much I was struggling. And they really are the ones that helped me turn my trading around. And everything that they taught me and the principles and concepts they taught me are the things I teach to my students as well. And as I said earlier, this is what has sustained me now, almost going on 5 decades. So let me begin with what I learned trading on the floor of the exchange. And here's what my mentors said to me. He said, Steve, overthinking is what kills your trading because the market is actually telling you everything you need to know. Now, this went against everything I had been taught. I was taught to have, we didn't have, trading rooms or chat rooms at the time. We had newsletters where we were supposed to listen to all these gurus and wait after the market closed to watch them on TV and see what they said. I was watching with bated breath for every earnings report or jobless claim. I was, just doing all the things I had been taught about support and resistance and Fibonacci levels and stuff, but nothing was working. In fact, I was overthinking everything. If you'd seen my screen on those, early years, I had maybe 30, 40 indicators, and I was, following and watching too many things. Everything was really complicated. What they taught me was they said the market really is telling you everything you need to know. But the funny thing is that I was never taught to learn how to listen to the market. I was always taught to listen to someone else, some trading guru, some guy on TV, or some earnings report. Once I started learning how to listen to the market and let go of all these things, what my mentors called useless noise, that's when my trading turned around. So really, the first couple of years, I didn't make any money as a specialist. I was just basically trading water. Once I learned how to let go, I stopped looking at news. Believe it or not, I still have not looked at news in over 4 decades, and I'm still here trading. I stopped waiting for the earnings to come out. I stopped listening to gurus and just learned how to listen to the market because it really tells you just about everything you need to know. That's when my trading turned around, and that's what has sustained me. So this is what we're going to be focusing on today. 2 simple edges, but very powerful edges that just focus on one thing, listening to the market. Guess what? There's nothing you have to buy. There's nothing you have to download in your computer. It's right there. You already have access to this. You'll see how simple these 2 edges are, but how powerful they can turn your trading around. Okay? So let's get right into it. What is the first edge? The first edge is if price is above the 50-period simple moving average, the overall trend is up. And conversely, if price is below the 50-period simple moving average, the overall trend is down. And someone would say, well, what's so important about that? Okay, it's too simple. Why? Well, believe it or not, we only want to be in sync with the overall trend. In other words, if your overall trend is up, if price is above the 50, we're only going to be a buyer. If price is below the 50, we're only going to be a seller. Now, I know a lot of you would say, well, yeah, but sometimes I get some great buy setups below the 50. I can't take those. Well, sure, you can always do whatever you want. But take it from someone who's done this, and tons of people we've taught over the years. It's almost similar to the slot machines in Las Vegas. They are designed to give you a winner every once in a while. But in all actuality, they are the worst odds in all of Vegas. They're the worst odds of any gaming there is in Vegas. But they're designed to give you a win because they want you to stay there. Because if you stay there long enough, they know you're going to give everything back and you're going to leave with nothing, right? That's the odds. Now, trading and buying below the 50, sure, every once in a while you get a phenomenal signal and it goes straight up. And trading above the 50, you sell short and it'll go below and it'll continue to go lower and lower. But remember, trading this way is designed that if you continue to do it, you're going to ultimately give it all back because the odds are not in your favor. Let me share with you what I mean here. Let's look at this generic chart. Doesn't matter what it is. Could be a stock, could be currency pairs, could be a 1-minute chart, could be a monthly chart. It makes no difference. But someone would look at this and say, well, Steve, there's really no trend here at all. We're going down, right back up, right back down. But what's the first thing we teach our students around the world? Whether they've been trading for 30 years or for 30 minutes, we always tell them to apply the 50-period moving average. And then ask yourself, where is price in relation to that 50-period moving average? If price is above the way it is right here, well, then the overall trend is up. And this is not me telling you what the overall trend is. This is not some convoluted, indicator or algorithm. This is the market telling you the overall trend is up. And if the overall trend is up, you only want to be a buyer. The odds are in your favor that you will have higher level of consistency if you only take buy setups, regardless of what time frame, regardless of what market. Now, similarly, we can look at this chart. Once again, kind of going sideways, kind of directionless, no trend, right? But if we apply the 50-period moving average, then we ask ourselves, where is price in relationship to that? Well, price is below. So then the market is telling you the overall trend is down. See, it's that simple. But I know a lot of students, especially beginning students, say this is too simple, Steve. This is too simple to work. I can't apply this. I'm going to miss out on a lot of signals. If you don't believe how powerful this is, go back and look at your last 10 or 20 trades. I can almost guarantee you that the reason you had a loss was because you were buying below the 50 and selling above the 50. All right. All right. So now you know the overall trend. Right now, whatever you're trading, whatever market, whatever time frame, you should have a 50-period moving average applied on that. Now, that's the overall trend. What about the short-term trend? Well, this brings us to edge number 2. When a bar closes in the top 25% of its range, the market, not me, not some earnings report, the market is saying, I want to go higher on the short term. Conversely, when a bar closes in the bottom 25% of its range, the market is saying, I want to go lower on the short term. Now, if you don't know what that means, closing in the top or bottom 25%, let's look at this generic bar again. Could be a 1-minute chart, could be a monthly, could be a weekly, makes no difference. But what you want to do is whenever you see a bar like this, and it's above the 50-period moving average, divide by 4 separate but equal parts. And if you close in that top 25% right here, that's closing in the top 25% of the range. And once again, the market is telling you, not me, the market is saying, I want to go higher on the short term. That's how simple it is. So you don't have to overcomplicate things the way I did and look at different time frames. There's absolutely no need to. You can if you want to, but remember, we're trying to keep our trading simple. Remember, overthinking is what kills our trading, overcomplicating things. Keep things as simple as possible. For example, here's that chart we looked at earlier, right? The overall trend is up because price is above the 50-period moving average. All right. And now we have a bar right here that closed in the top 25%. And look what happened. We went up. Now, this is where traders always say, yeah, but Steve, the market immediately went down. And if I had shorted here, I could have made some good money. Well, sure, but you would have had to be quick because what do we have here? We have another bar that closed in the top 25%. And days later or bars later, it's making brand new highs. So you had one day to make a quick gain. Wouldn't you have much rather just been in sync with the overall and the short-term trend? That's how simple this is. Let's look at this bar, okay? What about when we close in the bottom 25%? Same principle applies. Whatever bar, whatever time frame, divide by 4 separate but equal parts. And if you close in that bottom 25% right here, the market is telling you, not me, not some economic report. The market is saying to you, I want to go lower on the short term. All right, so let's look at this example again. The overall trend is down, right? Because we are below the 50. And what do we have here? We closed in the bottom 25%. Look what happened, okay? See, this is all done by the market telling you what it wants to do. Now, if you want to, you're perfectly, free to do whatever you want. But if you apply these 2 edges, I really feel they will increase your odds for consistency tremendously. You can apply these to the current strategy you're trading, okay? Whenever you get a buy or sell signal, wait to see if it closes in the top or bottom 25% of its range. And wait to see if it's in sync with the overall trend, with the 50-period moving average. I was taught the same thing that, well, Steve, I have to look at 2 different time frames. I was always taught that if I'm trading a daily bar, I should have a weekly time frame also. Or if I'm trading a 15-minute time frame, I should look at the daily trend. That's fine if you want to, but there's no need to now because all you have to do is look for bars that close in the top or bottom 25% and where they are in relation to the 50-period moving average. Keep things simple. Don't overcomplicate your trading. In my opinion, I've learned in my last 47 years of trading that there's no reason to look at 2 different time frames. I only look at the chart I'm trading, okay? Regardless if it's a day chart or a 5-minute chart. It makes absolutely no difference. Okay, so these are two edges that I really feel can improve your trading immediately. Go back and start researching. Go see if they can. But guess what? How can we apply them? Well, I'm going to share with you a trading technique using these two edges that you can start using as early as today, okay? This is a trading technique, doesn't matter what market you're looking at, doesn't matter what time frame, and it employs these two edges. Okay, so let's look at this chart in HBQ, okay? All right, someone looking at this once again would say, okay, well, it's kind of going up, but I don't really have any idea here. My strategy didn't give a signal, or that guy in the chat room didn't say to buy it, so I really don't know what to do. You see, this is the way most traders trade. We're looking for someone or something to tell us what to do. Our job as a mentor is to give you the information so that you can make your own trading decisions. And all you have to do is learn how to listen to the market. Now, what's the first thing we teach our students? Apply the 50-period moving average. So that's the first part of this technique. You're always going to have the 50-period moving average. Now, we want to find bars that are closing either in the top or bottom 25%, but intersect this 50-period moving average. We want to see them either touching, very close to, or intersecting this 50-period moving average, okay? And it doesn't matter if they close in the top or bottom. Now, in this case, we actually have two bars that closed in the top 25%. Now, on our platform, this is automatically done for you, okay? All you have to do is click on top, bottom 25%. We see here, and they automatically will show you where these are. So what is this telling us? Well, when you have a minimum of one, the more the better, bars that are either touching or close to the 50-period moving average. In this case, they close in the top 25%. This is a strong, strong sign that there's going to be more move to the upside. And as we see here, look what happened after this, okay? The stock took off. Now, obviously, some news came out or some event that caused this to gap up. Isn't it funny how you would have known almost 2 weeks in advance that the market wanted to go higher? Okay, so let's look at some recent technique examples of how this happens over and over and over again in all markets and in all time frames. And everything you're going to be seeing today was displayed coming from our platform. This is the PTS Primo charting platform I developed with Pro Trader Strategies that actually teaches traders how to trade. Everything is one click away on our platform. So you don't have to divide bars into 4 separate equal parts. It's one click away. All right, so let's start out with PATH, P-A-T-H. Someone looking at this would say, well, Steve, I've always taught this is a base right here. We're making kind of a double bottom. Most likely it's going to go higher, and that guy in that chat room told me to buy this, right? This is the way most traders make their decisions. But we teach our traders, our students, to make decisions based off the chart. Now, using this technique, first thing you do is apply the 50-period moving average right here, right? Okay. And then secondly, we want to find bars that close either in the bottom or the top 25% of their range that are either touching or very close to that 50-period moving average. And with one click on our top bottom page right here, we see that we have 1, 2, 3, 4 bars that are very close to or touching, intersecting the 50-period moving average. So even though it may appear as if there's a bottom right here, or may appear that we're basing to go higher, the market, not me, not some guy on TV, the market is telling you it wants to go lower. And in the following month, the stock fell out of bed. In fact, actually, it gapped down much lower. But isn't it funny how you would have known a full month in advance that it wanted to go lower? All right, let's look at GME. Remember, we looked at this in the beginning. The stock took off based off, it was a meme stock, and how someone made an announcement. And people always say, oh, gosh, I got to buy off this announcement that was made, or something that's always going up, and I always miss it. Well, how could these two edges helped us? Well, firstly, it looks like a directionless market, right? But if we apply the 50-period moving average, we see that once price closed and crossed above, the market is telling us the overall trend is up. Now, what we want to do is we want to find bars that either are intersecting or touching that 50-period moving average and are giving us a clue, either closing in the top 25 or the bottom 25. And with one click on our platform, guess what? There's two right here that are intersecting and touching. So we knew in the first week of May that this stock wanted to go higher. And if you wanted to buy, you could have used this technique to buy right here. And then look what happened. The announcement came out and the stock shot up 47 points. Now, we knew in advance of any announcement being made of any meme stock, all the, the rumblings going on in the internet. Why? Because the market told us in advance, just the same way my mentors taught me 47 years ago. The market tells you everything you need to know. And remember, none of this costs any money. You can just do this on your own right now. Now, a lot of our students come having bought or purchased some $10,000 or $15,000 course talking about support. And they say, well, Steve, I was always taught support is the way you should trade. If the big banks and the big money is buying or selling, you have to be in sync with them, right? Sure, if you want to, but I'll give you a little, personal opinion of mine. When I was a specialist on the floor, I traded with the institutions. The big banks would give me orders in my book to buy 1 million shares of this stock, to sell 1 million shares of this stock. And I just can tell you off of personal experience that they had the worst track record of any other trader brokers I was trading with or other specialists, the worst. So I would never put my faith in following whatever the institutions are doing. But if you want to, once again, as an educator, that's your decision. We're not here to tell you what not to do. We're here to teach you things that actually work. All right. So you could sit here and go like, yeah, this is major support here. Why would I want to sell this? But we don't teach our traders that. We teach our traders the first thing to do is to apply the 50-period moving average. And then you can see that the majority of price bars are below the 50. Now we're looking for the majority of price bars that either close in the top 25 or bottom 25 and that are touching or intersecting that 50-period moving average. And with one click, we see that we have actually 4. Now, 1 is closing in the top 25, but 3 are closing in the bottom 25. So right there, the market is telling us the majority of bars are closing in the bottom. So therefore, we would take this to be a sell signal. And we would use this to say that the market is telling me it wants to go lower because these two things are in sync. And look what happened on the very next day. Gap down 20 points. How did we know that? We don't follow any news. I've stopped looking at news nearly 50 years ago. So how would I know to sell this or to think it was going to go lower? Because the market told me. That's all you have to do is learn how to listen to the market. The market tells you what it wants to do many times in advance of news events. Here's an example in BURL. The 50-period moving average is applied. Price was originally below, but now it's above. We have 2 bars that are touching or intersecting the 50-period moving average. That's all we need to know. That's all we need to know. Actually, all you need is 1 bar, but the more the better. But we have 2 bars here, and look what happened the very next day. Gapped up 45 points. Once again, based off some news or some event, how did we know? The market tells you everything you need to know. Here's ILMN, okay? Looks like the overall trend is down. The majority of bars are closing below, but we want to see bars that are intersecting this as well or close to. With one click, we see that we have actually 4 setups. Now, 1 is above, but 3 are below. The majority of bars are telling us that we're closing in the bottom 25%. We only have 1 closing in the top. So this is enough for us to know that, well, the market's saying it wants to go lower. Unless things changed and all of a sudden we had a majority of bars closing in the top 25%, well, then the market was saying it changed its mind. But until that happens, we're a seller. And look what happened. The market fell 35 points. Now, this is what we mean by being in sync with the overall trend. Look at all the little bounces the market had. Now, this is where students get confused and they say, but Steve, if I had bought here, look at it, I would have had a nice little profit. Yeah, but you would have had to be quick because look what happened just days later. It's making new lows. Goes up, making new lows. Goes up a little, makes new lows. You'll have a much higher level of consistency if you look at these as selling opportunities as opposed to buying opportunities. Okay, this is why traders fail because they see these bounces and they say, hey, listen, it's going to go much higher. But remember, you will have a higher level of consistency if you are in sync with the 50-period moving average. Okay, let's look at Moderna. All right, where is price in relation to the 50-period moving average? It's above. So we know automatically that the overall trend is up. We're only going to be a buyer. Now, if we want to use this technique, then we want to find bars that close in the top 25%. And we have 1 that actually intersects and 2 that are very close to. So this is enough for us to know, and this was back at the beginning of May, that this wants to go higher, much higher. And 65 points coming into last week. Okay, this is how simple this process can be. Let's look at workday. All right, once again, students would say, Steve, this is obviously in an uptrend. We're making higher highs, higher lows. This is the definition of an uptrend. You got to buy this, right? That guy in that chat room told me to buy this. It's going to make new highs. Well, this is why students fail. Remember, once again, you're taking yourself out of the game by not learning how to listen to the market. The first thing we teach our students is not to go to a chat room or a trading room, but to apply the 50-period moving average. Well, where's the majority of price? It's below the 50. So the overall trend is down. So we don't care how much this is bouncing. This is a selling opportunity. Okay. Now, we want to look, if we're using this technique for a bar that closes in the bottom 25%, and that is either touching or intersecting. And what do we have here? With one click on our platform, click top bottom 25%, we see here that this bar did. Now, we'd like to have more. We'd like to have a confluence of maybe 2 or 3, but all we need is 1. And look what happened. In 2 days, the stock gapped down, and a week later, it was 55 points lower. So what would have happened if you had bought this and said, hey, Steve, that guy says to go long this, and you would have been left holding the bag? Once again, this is why it always pays to be in sync with the overall trend. Obviously, some news came out or something happened. Why this gap down? Isn't it funny how 2 days prior to that, the market was telling us it wanted to go lower? All right, let's look at this example in KAI. Price is below the 50-period moving average, so the overall trend is down, but what do we have here? 2 bars that close in the top 25%, as exampled here by the up green arrows, and they are touching and intersecting. So this is all we need to know that this stock wants to go higher. 85 points coming into a couple of months ago. CRM, okay, Salesforce. This is screaming that it wants to go lower. Even though it's kind of drifting higher, we have 1, 2, 3, 4 bars closing in the bottom 25% that are touching or intersecting the 50-period moving average. It's not telling us it wants to go lower. It is screaming, I want to go lower. A week later, it gapped down 72 points. Once again, you are always free to follow news. You're always free to follow anything fundamentally. As an educator, it's not my job to tell you what not to look at. It's my job to show you what works. And if this works, as my mentors taught me, there's no need to look at anything fundamental if you're trading. There's absolutely no need at all. As I said, I am living proof that you don't need to look at any fundamental information. I stopped looking at it nearly 50 years ago, and I haven't. I never look at news. I listen more intently to what the market is telling me. Okay, NVIDIA. This is going back to the beginning of last month, okay? This is what traders do. They say, gosh, how would I have known that this stock was going to take off? All the smart money, they know in advance. And, these guys, the inside traders, they know, and I'm always the last one to know this stuff. This is a victim mentality that traders love to rely on. They always want to play that they're the victim, and I don't know enough to, to make the big money, and these guys hold all the power because they have the big bucks. That's silly. It's silly to think that way. You have the information right now, and I've been giving it to you for free. 50-period moving average, and we had a total of 1, 2, 3, 4 setups right here. The first one was going lower, but the market changed its mind. So if you had taken this as a signal, sure, you would have lost minimally, but then you would have gotten right back on the horse and gone long, made back what you lost, and then some, okay? So you never have to whine and complain the way traders love to if you learn how to listen to the market, because the market is always asking you to jump on board. It's not an enemy or something to fight against. It's something to trade with. In this example, a lot of traders could say, gosh, I bought this stock based off that recommendation or that guy on TV, and it just keeps going lower and lower. And look at this news came out. Now I've turned into a long-term investor. I'm just holding this. There's nothing I can do now. I've got to hope and pray for it just for me to make some of the money back. But if you applied this simple technique, you would have known well in advance to exit, because a lot of our traders don't like to go short. They don't feel comfortable. That's fine, but you can use this as an exiting tool. And right here, the market was telling you, I want to go lower on the overall and the short term. So most likely it's better to sell than to hold on to this losing position. You could have saved yourself over 100 points and gotten out of this position. All right. Now we can apply this to other markets, other time frames. Here's a 4-hour chart of the euro British pound, okay? Makes no difference. We apply the same principles. Now this looks like it's going lower, but maybe you think, maybe it's going to bounce up. But if we apply this, we see that originally we were above the 50, but these last 3 bars are now below. So the overall trend is down. Now looking for this technique, we see 2 setups right here. This was intersecting the 50-period moving average. This one was close to it. So that's enough to tell us that the market wants to go lower. And it fell 100 pips. That's roughly about $1,000 per unit in the next week or so. We can apply it to a 4-hour chart or to a weekly chart. Here's a weekly chart of Costco. This is going back all the way back to March of 2023, just about a little over a year ago. Now, the stock was basically doing nothing on a weekly time frame. These are weekly bars. In fact, you could say, well, we're in a range market. I'm going to wait for it to break out or wait for some news to come out or see what the earnings are doing because the market's not telling me anything. See, this is the way we're trained to sense that. But with the simple information I've given you today, the market is telling you that, well, we're originally below the 50, but now the majority of bars are closing above the 50. And on top of that, the short-term trend is screaming that it wants to go higher. Look at all these bars, 1, 2, 3, 4, 5 that closed in the top 25% and that were touching or intersecting the 50-period moving average. The market is not telling you it wants to go higher. It is yelling at you, please buy me. I am going to go much higher. And in the following year, it has gained over 300 points. And the entire time, as you see here, it's been above the 50-period moving average. No reason to sell or go short because it is trading above. Okay, let's recap what we shared and taught you today, okay? Remember, going back to what my mentors taught me when I was struggling, my first 2 years on the trading floor, I struggled tremendously. I was barely making ends meet. I had to make expenses. I had to pay my assistants, and I had to trade 50 or 60 stocks. I had a computer in front of me and all the information, what the earnings were, and I couldn't make a dime. I was taught the same things that many of you are taught. And here's what my mentors taught me. They said, Steve, overthinking is what kills your trading. I was literally complicating everything with indicators, with fundamental news. I had so much information in front of me. It's really a wonder to know how I could even trade based off so many inputs coming in all the time, trying to make a decision. When my mentor says, listen, strip away all of that, what they called useless noise, and just focus on one thing, the market you're trading in front of you. Just one chart. You don't have to look at tons of different time frames, just one chart, because the market tells you everything you need to know. Now, this was very difficult for me to really realize and to really understand in the beginning. In fact, I fought it for a couple of months. I thought, this is ridiculous. It can't make any sense. But once I slowly but surely started to see that it worked a little bit, I started to look and dip my toe in a little bit more and more until ultimately I saw that, wow, they're right. There's actually no reason for me to use this other information. If I learn how to focus on this, I can become a consistent trader. And that is what has been the cornerstone to me being able to trade for almost 5 decades now. And we've turned around so many traders who've been trading for years, some traders that just started trading by using these very simple but powerful and consistent edges. So ask yourself, do you think these 2 edges that I just taught you can help your trading for the remainder of 2024? As I said earlier, go back and apply these to your last 10 or 20 trades. I can almost guarantee that the reason you had losses were because you were out of sync with these 2 edges, okay? Now, what if I could give you 3, 5, maybe 10 more edges, completely different edges, based on simply what the market is telling you? Just as simple, but just as powerful. Well, I think your answer would be yes. And so I have a great special offer for all of you attending this Investor Summit today. We're going to offer you what we call our Secrets of a Stock Exchange Specialist training sessions. This is basically a 3-hour video. Now, some years ago, I was asked to be the head speaker at a conference in Colorado, and I spoke for roughly 3 hours where I gave and spoke about many more edges, ways in which to trade the market, all these powerful things that I've accumulated in nearly 50 years. I talk about which indicators not to use more than which indicators to use. I actually go into the difference between a system versus a strategy. I also talk about the number one chart pattern you should be looking for in any method, any strategy that you're trading. How to be on the right side of markets, and more importantly, how to be on the wrong side of the market. But here's the most important thing I think that's included in this 3-hour trading package. This is where I give the complete rules to one of our most prominent and premier pullback strategies. This is strategy number 1. Now remember, what I taught you today was just simply an edge. It didn't give you exact entry points. We didn't talk about exact stop placement. We didn't talk about exiting or money management. But in this course, we will give you the complete rules, entry, exits, stop placement, money management for pullback strategy number 1. Now, if you're not familiar with what a pullback is, let me share with you some examples here. Here's an older chart, and ARHS, excuse me. All right, what a pullback method does is it looks for an established trend. In this case, we have an uptrend, right? But a pullback signal looks to buy at the lower portion of these little pullbacks, these little sell-offs. And this is where you want to buy, because if it's a true and valid pullback, the trend will resume to the upside. So this is what you want to do. Now on our platform, it's as simple as clicking on strategy number 1, and the signals automatically appear. Look where they were generated, right at these lows. And every time a signal was generated, the stock shot up higher. Signals are generated, stock shot up higher. Another signal was generated here, and look what happened the next day, gapped up. Once again, these are all based on techniques and edges that are listening to the market. There's no fundamental news applied. There's no real convoluted indicators or conventional wisdom. It's just very simple, powerful edges put together in the form of a strategy that we give you all the complete rules to. Now, this can work to the downside as well, all right? Here we have a chart of Biogen, kind of slowly going lower, but someone could say, well, it looks like it's bottoming out. Steve, there's a bullish engulfing pattern right here. It looks like a reversal, and that guy in that trading room says to buy this. Okay, once again, this is what we teach our traders, not to focus on what an outside source is telling you. What is the market telling you? With the edges included in strategy number 1, they actually generated a sell signal right here. And look what happened to the stock right after that. Fell 25 points. So much for the buy setup, right? For the bullish engulfing pattern. So you're going to get the complete rules to that. And included with that, let's look at another setup in NVIDIA. Okay, this was going back to February. Now, the stock obviously had been going much, much higher. But at this point, a lot of people were saying, well, look, it's having a little trouble right here. In fact, it looks like there's some resistance. So you decide to maybe exit your long position. If you're a more aggressive trader, you would have said, hey, you know what? I'm going to go short. And you sell. And for a couple of days here, you're feeling really good about yourself. And that guy on TV said it's going to come all the way down to the bottom, making you low. So you're short and you're still feeling really good. But guess what? Strategy number 1 said this is a pullback, and it actually generated a buy signal right at the very low of that just 2-day sell-off. And look what happened. Had you stayed short, you would have lost money because it gapped up. But if you were long, the way strategy number 1 generated a signal, you could have potentially captured 250 points. So this is how simple it is using strategy 1. You'll get all the complete course rules to this. You'll know exactly where to enter, where to exit, where to place your stop. Okay, this is a full-fledged strategy. But guess what? Normally, this would cost close to $1,000. Okay, there's so much information jam-packed in here, and roughly 50 years of information I've accumulated and continue to trade with in my own personal account. But because of our association with the Investor Summit, we are going to have a deep, deep discount. So we're not going to charge you $9.97. For a limited time only, we are charging this all the way down to $37. Think of that, $37. You can't even go out to lunch. You can't even buy a breakfast for one person these days for less than $40 to $50. $37, you're going to get close to 5 decades of more high probability trading education and things I've accumulated in that time. Most of these things you won't find anywhere else because they're from my years on the trading floor. So take advantage of this deep, deep discount, $37, but this is for a limited time only. And guess what? We're going to also throw in an extra bonus. So we're not just stopping there with a $37 discount. If you decide to purchase your secrets course, that's a 3-hour video course, we will also include a 50% discount on any other product we sell. So for that limited time, if you purchase the secrets course and you say, hey, listen, I'm interested in the platform and interested in another strategy as well, we will cut that price in half. because you became a member of the secrets course and you're now a student of mine. One last thing that I don't include, we also have educational correspondence. This means once you become a student of mine, you can contact me whenever you like via my personal email address. Only my students get my private email address, and it comes directly to me. So this is not something that goes to an intern, to a salesperson, to my assistant. Your questions, your emails come directly to me, and you can email me prior to the opening, after the close, even on the weekends. It makes no difference, and I will answer your email just as soon as possible. So it's the next best thing to having a specialist, a former stock specialist, sitting right next to you while you're trading. So you can email me examples, say, Steve, did I do this correctly? Or is this, I don't understand this properly. Is this correct? And I will get back to you. So you have personal educational correspondence from yours truly. That's always included in any course you decide to take. You owe it to yourself to take your trading to the next level. If you're struggling right now, if you're having difficulty, I know what that's like. I've been there. As I said, for 2 years, I couldn't make ends meet. It was difficult. I know how frustrating that can be, and I know how depressing it is because you're using your hard-earned money. Take yourself to the next level, become in charge of your own trading. Take charge of your own trading, and you owe it to yourself. You've worked hard. It's time to become a consistent trader. I'd like to teach you. And especially for $37, I really think I can help you with that. Here's how to take advantage of this great offer. Contact my sister site, which is Pro Trader Strategies. They're in charge of all the discounts, all the pricing, also in charge of tech support for any of our methods or our platform. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They would be happy to take your discounted $37 order over the phone, or you can talk to them and ask them any questions about other strategies or methods as well. You can take advantage of that 50% discount. Now, that link you see at the very bottom is the link that will take you to the info page. If you'd like to sign up online, you can go there as well. It's not a live link. I believe Kate or John is going to post a live link in the chat box or so, but you can always write that down or copy and paste it, and you can go to that link as well. But the best thing is really simply to give them a call. There's absolutely no obligation. They're not going to try and sell you anything. They're there to help you, to work with you. They're very easy to work with, and they're very flexible. So give them a call, 310-598-6677. I believe we have a couple of more minutes left. I don't want to step on the next speaker. You're going to get a lot of great information from following speakers coming along the entire day and week. So I will take just a few, I guess, if you want me to read them off. If you're in the chat box, let me just open this up. Does this same principle work for Forex and the NASDAQ? Yes. You can apply this principle to any market, any time frame. We have students using this edge on crypto, on any crypto market, on Bitcoin, on Dogecoin, any you can imagine. We have Forex traders using this on 4-hour charts of the Forex. We have NASDAQ, and we saw a lot of NASDAQ examples. You can use it on ETFs. What a lot of our students like to do is use it on, let's say, the spiders. That's the ETF that represents the S&P 500. And you can use this as a market direction tool. So if you see these principles applied to the spiders for, let's say, a buy setup, well, guess what? It doesn't mean you have to buy the spiders or trade the entire S&P 500 list of stocks, but maybe one of your stocks is in that S&P 500, or it'll at least tell you that the market wants to go higher or lower, depending upon where that setup is, okay? So yes, it makes absolutely no difference which market or which time frame, okay? Someone's asking, do you consider the slope of the 50-period simple moving average? Good question. Yes, we do, but that's a little bit more advanced. I mean, it's entirely up to you. As you saw, there were a number of examples where, especially in that last example with Costco on a weekly time frame, the slope was basically just sideways. But a lot of our traders say, listen, I've had a lot better success with a really strong upward or downward slope. And if that works for you, fine. You see, our job as a mentor is to provide you this information. But you can, see to use it however you like, as long as you stay within the boundaries of the setup. Okay, so as long as you don't apply, let's say, the tons of other indicators or fundamental news, you're kind of muddying up the principles. But if you stick with the basics, sure, you can look for the slope. And a lot of our students like to use other time frames, say maybe a 34 exponential moving average, or maybe even a 20-period simple moving average. Feel free to experiment, but I can tell you, after using this for nearly 5 decades, the 50-period works the best because it's easily transferable onto any market, any time frame. You see, what you don't want to do is say, well, I'm going to be intraday trading the E-mini, so I use a 10-minute moving average. But I'm also have some positions for my long-term trading account, so I'm going to use the 100 or the 200 moving average. You don't want to be going back and forth. Excuse me. Just the same way you don't want to be looking at multiple different time frames. Keep things simple. And so you want to have one moving average that's easily transferable onto all markets, all time frames. And in my opinion, the 50 is the best. I found that over the years that works phenomenally well. Okay. I think I have time for just one more question here. Let me see. Yes, let's see. You have slides available for us later. Well, I think basically we're not going to be giving you slides. I believe this is being recorded. You'll be able to watch this at your leisure. Okay. So if you want to go over these principles again, I believe you can watch the video and it makes it a lot more sense. The offer, thank you, Kate, for posting the offer. It's been posted. That link is on the chat box right now. So if you want to just open that up, you can simply open up the chat box and there you'll see the link posted there. Okay. As we close, I just really want to say thank you to everyone at the Mad Hedge Fund Traders and Investors Summit. Thank you for giving me an opportunity to speak. And thank you all for joining us this morning, to being able to attend for the very first presentation. I really appreciate it. I know it's early for some people, but I just really want to teach traders how to trade so they can take their trading to the next level. So I really hope you learned something today. And I really wish you all the best of luck in trading. Stick around, a lot of great speakers coming up. And thanks to everyone in Investor Summit for giving me the opportunity to speak. Okay, I'll hand it back over to you.
All right, Steve, that was very interesting and educational, and even educational for me. I never miss an opportunity to learn something new, and the markets are always throwing new stuff at you. So thanks again, Stephen. Love having you back again, and I'm sure the listeners also greatly appreciated your presentation.